Good morning, traders. It is 8 a.m. Chicago time on the Wednesday of the 30th of September, the last day of September today, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Fair amount of news overnight, but nothing that seems to be driving the markets. Uh, well, a couple of good economic releases in Europe. API oil inventories came in yesterday with a surplus of 4.6 million barrels. We're getting the DOE number at 9:30 Central, 10:30 Eastern today. Cushing came in at negative 1.2 million, gasoline plus 3.3 million. It's a lot. Distillates plus 0.2. This was the first build in 3 weeks, largest build since September 1st. Japan came out with its August preliminary industrial production. Month on month came in at negative 0.5%. This was the third straight decline versus 1.0. And then I ran into a couple things here. The Wall Street Journal says U.S. exports are on track to decline this year for the first time since the financial crisis, wilting under the weight of a strong dollar and global economic strains. The Financial Times writes the U.S. and global equities are heading for their worst quarterly performance since 2011, with investors rattled by China's economic slowdown, uncertainty over Federal Reserve policy, and growing pessimism about corporate earnings. What they didn't mention is the fact that, again, India reduced its lending rate by 50 basis points. That's another big consumer. Um, they did so yesterday, and a central bank would not do that if it feels that the economy is on track. A little bit ago, we got September ADP employment change came in a plus 200,000 versus 190,000 expected. I want to remind you again that Friday is non-farm payrolls and unemployment day. Friday at 7:30 Central, 8:30 Eastern. That's the big number for the week. Looking ahead today, we're looking at 8:45 Central, 9:45 Eastern, just 15 minutes after the open. We're looking for Chicago PMI 53.0 expected, 53.0. Remember that this number is subscription based and can come in early. It can come in. It's come in the past at around 8:41. I often hear a rumor number ahead of time. Actually, I get a rumor number that precedes the release, and then we get the actual public release at 8:45. So be careful there. Again, 9:30 DOE crude oil inventory is expected at negative 500,000 barrels. Distillate inventory is expected at negative 1 million barrels. Gasoline inventory is expected at negative 500,000 barrels. Remember, API oil inventories came in with a massive surplus, so it's likely to surprise there. As far as speakers, Fed's Dudley spoke at 7:35 and has continued to release comments. IMF Speaker Lagarde discusses the global economic policy and prospects at 9:30. That's going to be important. And then we're looking for Fed Speaker Yellen at 2 o'clock today with Bullard on community banking in St. Louis. 2 o'clock, Fed Speaker Yellen today. Let's switch gears here and look at our technical picture. So, overall, yesterday, the expectation yesterday was to open in range, just like we did, in range in value. The expectation was for it to get responsive down to as much as 72.25, the point of control. This was a weak structure that was left behind from Monday. The point of control, why is it a weak structure? The point of control at the low end of the range at trend day down, a weak low. The auction did not seem to complete itself, so the expectation is at some point in the session we would see a lower low to 68.75. However, the initial expectation, let me clear my throat 1 second. However, the initial expectation here, that's quite a voice change. The initial expectation here is for it to pull back to around 72.25, chop, and then move up towards, if you recall, 92 was the number we're looking for. What ended up happening is a little bit different. I was looking for 92, and then I expected it, if you recall, from yesterday's Trader Bite. If you could even hear it, it was so choppy. The expectation is it would stay in range, but then eventually we would see a lower low. It took care of business very early. It ended up making an opening swing high of 78. You could see the sellers stepped in at 78 right here for a quick rotation down. Went to 72.25 on the nose. That's our opening swing low, this little blue line. So that's where we found our first buying interest. So our first selling interest, our first buying interest, that's what we define as the opening swing. Moves back into the middle of the opening swing and then drops right through. The open yesterday, despite what it seemed like, the open yesterday was an OAIR. It was an open auction in range, and in an open auction in range, we expect the market to run through this OS multiple times. We are not aggressive with our mid trades because it's an open auction, which means that there's two-way interest. There's interest from buyers as it drops. There's interest from sellers as it pushes up. And that's exactly what we got. So early on, we did see that there is a two-way market here, and that and overall it had some pretty good OTF participation, a 16.75 move once we tested below the low, and that was a key element to setting up the 92. We could not get to 92. We missed it by about 2.5 points, 2.25 points. And so 9 ticks basically, and but it did set this trade up right here, this pullback. We have an impulsive move up. We have a pullback to around the mid. It stopped right above the open, and then we have our continuation move, and there's the correction. And at that point, the IB's in right here, and then we've already had a break, a range extension of the IB high. There's a potential for another move up. It fails to make a higher high, and it pushes right back through to the opening swing. And once it does, then we expect it to get to the other side of the opening swing and then chop around. It ended up selling off on the close. But what's important about yesterday, and again, the only purpose I'm doing these Trader Bites is not to sit here and hand you a plan for the day. The idea is to understand. I want people to understand the auction and how important that is to your trade decisions. Once you understand the auction, you can stay flexible with the market and then use whatever indicator you want to use, if you're inclined to use indicators. So overall, once we break through to the downside, once we break through the mid is right here, we chop around, and then the expectation is, okay, we've retested the low by a tick. There's a failed auction, a local failed auction here, but overall the expectation is it has rejected the prior day's lows. It's tried to go out of range, has rejected that. There's clear evidence of that rejection. There's OTF or high time frame participation here. So this is a huge clue that it pushed out of the prior day's range, probed, and was unable to find further selling interest, and it found its buyers, and boy did they come in. And so once we do that, and then we break through the IB high, and then we finally end up pushing to the low side of the range again. Once we break through the IB low, you're likely to see all the bulls that came in because of this, and because of the range extension, you're likely to see them get flushed out, and that's what happened here. We have a nice taper. We have a nice flush here, pretty good low, and we ended up finishing. Look where the point of control is. The most valuable price of the day, and this is very important in seeing the big picture, the most valuable price of the day ended up being higher than the prior day's most valuable price, despite the lower low, lower high. And this is where it's advantageous to see what the profile is showing you, because in price action we have a lower low, lower high, and a lower low. The trend is lower, continues to be lower, but actually value shows that the point of control is in line. It's slightly higher. Today, yesterday was a balancing day. We have basically a fairly Gaussian kind of right out of a statistics book histogram. The value area is valid for today. It's 1880.50 down to 68.75. It's very valid, and so the expectation here is for the market to continue to balance with an upward rotation. Why? Rejection here, rejection here. The market's not ready to hold prices down. So with the close the way it was, with the fact that we are starting to reverse our most valuable price despite the downtrend, we're looking for a higher push. I don't see it as a sustainable push, but it is. We're expecting a higher push. It's not as clear as if we had a weak high. Like if we had closed near highs and we had a weak high, like a big bulby high volume node near the high, that would be much easier to read. But overall, this market's basically saying, look, we've done about 40 points of range down on the Monday. We've tried to extend that on Tuesday. We have an impulsive move, a pullback, completion move. Now we're looking for the correction and retest. And so overall, we're back into, oh, it did hit the 1900 overnight. So I was going to say overall we're into retesting the 1900 and the artifacts that were left behind from above. What is left behind from above? So these 2 days are in balance. So we put those together. Okay. So now we have a new composite of these 2 days. Up here, we had a composite of these 2 days. Then we fell out, and we expected it to be imbalance and start pushing down. But what it did is it came right back in, tested this 23, went to 26.75 last Thursday, and held in balance. So for that reason, we extend this profile out. This day here opens out of range of the prior day, in range with balance, tries higher, goes to 42.50. 40.50 was our key price on Friday, and it falls back in. So what do? It's imbalanced, so we push our balance out. So we're pushing our composite out. So what we're doing now is we are trading this composite, and we are in that key area that I'd mentioned, the 92 area, and we're looking for a retest of this, the volume that's up here. This doesn't look superb. It doesn't look so great. As far as strength is concerned, not seeing a lot more to do below. I'm seeing it potentially more likely to test lower to get good footing on yesterday's balance before it pushes up, rather than opening up here and driving up. Okay, because we are in a 2-day balance. So what does that mean? For our hypo, I'm expecting that the overnight inventory would balance. So here we go. Let's look at the overnight. Overnight inventory, very strong buyers. The inventory is much higher than the prior day's close, so the overnight inventory is long. It's likely to break lower, but we have a weak high with a point of control that's right against the top. This is, again, an incomplete auction, a most likely incomplete auction. We're looking for that overnight high to be taken so that we can complete that auction. However, the way this is set up, it is saying that, and remember, this is a P-shaped profile, so we are squeezing shorts on the overnight. We've moved through the stem of this profile very quickly and formed the large volume distribution later in the session, and that's a hallmark. That's the hallmark of a short covering overnight. So as we open today, I'm looking based on those facts. I'm looking for this to. Uh, I'm looking for this to. I understand that the overnight high is still weak, that it's likely to be taken out, but I'm looking for responsive selling back into the 80-50 area to retest the value that we've created, this price here, and the support that we have here. I expect it to retest down, but I expect the overnight high to be taken on a high probability, and then to test the 1175, which is your high from from Monday, the low from Friday. So that becomes our main target. And then beyond that, the 23, very big area, this 23 right here. This is the prior balance MC point of control. If it does not hold the 80-50 on the responsive, then we're looking for the price below it at 75 and a quarter, and that is our MC point of control. So what we have on the last 2 days is major acceptance between that 92 to the low, and then we have a minor area above that was created on Monday that still needs to be tested, or still is likely to be tested. The word needs and should have no place in trading. So on this, we're opening up right against that area. I'm looking for it to be responsive, and then if it's not able to find its support in this 80, 50, 81.50 area, it's likely to push lower. But I'm looking for the overnight high to be taken. I'm looking for 1912 to be checked, and then the extended target is the 23. That's the primary hypo. The secondary hypo is that it chops around on the open, pushes up on the overnight high, finds its sellers, moves through value, moves down to 87 to 75 quarter. It's not likely to hold the value high. In that situation, moves to 75 and a quarter, and then starts rebalancing again before it breaks lower. That's a lower probability play for today. I'm expecting higher more than lower, but we'll see what the market has to show us. That's all I have for you for today. I want to remind you tomorrow is a public Ask a Question webinar session. I did send a newsletter or an invitation to everybody on the Futures Trader 71 list, public list, and it's also on Twitter. They've put some reminders up. So if you're not following on Twitter, just have a look at twitter.com/Futures Trader 71. You'll find the link there, but you'll also find a spot or a form that you can fill in to ask your questions so that it's addressed in the webinar. When the webinar starts, all these questions come flying through, and I'm not able to sift through and pick out the ones that I can answer, or the ones that are likely to be most important to the crowd. I do the best at answering something that's going to serve the highest number of people, but having your submission allows me to prepare ahead of time and create a succinct and to the point answer. In any case, tomorrow at 1 Eastern, 12 Central, a public AAQ. The invitation is out there, and it's open to everybody. So if you want to retweet or resend that link to anybody you'd like, I would appreciate that. Good luck today, and I'll catch you tomorrow. Take care.